Namaskar. Hello and welcome to PGurus channel. I'm your host Sree Iyer, the man here in person. Sridhar Chityala ji. Sridhar ji, namaskar and welcome to PGurus channel again.
Namaskar. Very happy to be live sitting next to you, Sree ji, and where else but the valley itself.
Yes, indeed. And he is visiting the valley for a few days, and we found some time between his busy schedule to sit down to talk to us, because there is one topic that we touched upon, I think 2 years ago, when the Silicon Valley Bank was on the verge of failing, as to what was this banking crisis, how was it going to be tided over. At that time, the interest rates were still on their way up. Now, the Fed has hinted that we are done raising, and in fact, we are going to have couple of cuts this year, 2 or 3, I don't know exactly how many. Clearly, this is the presidential year, election year. There are going to be pressure from the White House to do this. Sridhar ji, on the one side, we're talking about, the mortgage rates will start going down. But what has happened is, see, it came from 0.25 to 5.25 or something like that. Right. So many people are now having their adjustable loans coming due. So the banks are under a lot of pressure to, pay up at this new higher rate. So what kind of a imbalance or structural challenge is this going to pose going forward? Because there's a reset cycle coming. 2-3 months down the road, everybody has to refinance their loans at a much higher interest rate. Your thoughts, sir?
I think it's a great question, and I think it's the most important topic that is making waves in the markets. The two things that are likely to happen as a result of the Fed's positioning or repositioning with an intent to bring the rates down. They were expected to bring the rates down in March or in June, and there are clear indications the inflation has not come down to the level that Fed is expecting, and they want to play carefully. They still have promised and committed at least minimum 2, potentially 3 rate cuts before the end of the year. Okay, so that 75 basis points is what the markets estimate. In conjunction with that, a very important announcement has also been made, which is remember, Fed's balance sheet was once around $6 trillion. We had 2 major crises. We had the COVID crisis, and then we had, to some extent, restructuring of the balance sheet when Mr. Biden came in. So the Fed balance sheet went up to $9 trillion. How does it go up? To support the bank's liquidity needs. Why do banks need liquidity? To support mortgages, to service other types of loans, etc. Right? So, especially when people are unable to repay, and they need to be given a grace period in terms of meeting their obligations. Anyway, Fed bought every security that was possible, built up the balance sheet. It has been bringing its balance sheet down slowly, to the extent we are now just between $7.5 and $8 trillion. The fear with rates still remaining high, if Fed accelerates in terms of the buyback of the lowering the balance sheet and not offering additional credit to the banks, some of the banks could have an imbalance in their balance sheet, because they may not be able to sustain and continue servicing its needs, and it doesn't have a Fed window available to go and draw the additional liquidity that it requires to preserve the equilibrium. So there is a growing fear, especially banks in the second tier. I think we talked about SVB is one of them. We have a couple of other banks which also went under during that period. So the instability that is caused by Fed lowering its balance sheet and not renewing and not extending credit, there is a fear in the market whether that is going to create next trigger in collapse of some of the banks, either by end of the year or by early next year.
If I understand you correct, there is going to be a challenge, but is it going to be on the same magnitude as what happened in 2008?
No. No, most of the balance sheets of the large institutions are fairly strong. This is only second tier banks, very similar to those banks which did not manage the imbalance in a rising rates environment in terms of the securities that they were holding. Okay, so that is when you hold securities by way of debt, what you promise your investors and what you in turn receive in the market, that imbalance can cause a potential problem. That's what happened in the case of Silicon Valley Bank, where you began to see the deposits the debt very quickly losing in its value. So to the extent it was going into some billions. In this instance, the banks that don't have the ability to service the balance sheet because they don't have a Fed window, such banks are mostly second tier banks, and very few of them are purely reliant on mortgages. It is those banks that could be in trouble. It is not a kind of cataclysmic story as far as the industry is concerned.
Last question, Sridharji. My audience will not forgive me if I don't ask you this question. De-dollarization. Well, you know, we've been talking about this. You have one point of view. I have others who come on the channel and give a different point of view. But the more I look at it, Sridharji, yes, there is a certain weakening of the grip that the dollar had over the world commerce. Do you think in 20, 30 years, the dollar might depreciate to a point where it is like what pound became after 1960s, 70s or so?
Well, I think this is I'm perpetually on the opposite side of the fence, and people often brand that I put on an American hat or an American representing the American view of the story. At the end of the day, one is emotions and second is facts. The facts are as follows, which is namely, everybody says that you need to de-dollarize. I mean, you can de-dollarize today. For example, India attempted to de-dollarize and wanted to use rupee as the basis for currency, especially with UAE.
No, UAE.
UAE is very big. India is one of the top four. Or five if you want to call UAE and Saudi Arabia. What did these two people come back and tell India? They said, no, we have currency exposure. We also find that it is a long-winded process in terms of settlement, because at the end of the day, most of these other countries still are pegged to the US dollar. So there is still process around the cross rates. There's also process around economic stability. There is also issues around how quickly you can settle in the absence of depth in the markets. So Russia and China, they do bilateral, and Russia also has asked India the question, okay, no problem, I have a lot of Indian rupees, I overcome the issues around all the sanctions, but what am I going to do with, because when there is such a significant imbalance between the Russian imports and exports, they're asking the question, what do I do with all these rupee? I don't have anything to buy, I can't do anything with it. So the point that I'm making is I can't look 30 years ahead or 50 years ahead and say, what's going to be the mechanism. All I can say is there are three factors. One is law. Is there a legal mechanism established and that is enforceable? If you talk Russia and if you talk China, these are not stellar examples of countries where you have legal enforceability of contracts, number one. Number two, systems. Are the central bank systems very efficient in these two countries? Questionable in terms of their ability to influence and their ability to set rates. They're all kind of collusional. Okay, second, central banks. Third, the third question is the cross-country trades. Is there some kind of normality between exports and imports? The only reason China was able to get away because United States was the biggest buyer from China, and US was prepared as a reciprocal gesture for China holding some amount of US debt in its balance sheet. It was able to buy. So the question therefore is, in the third, are there some kind of level playing field amongst these currencies for any currencies to emerge? When you have US dollar and the pound roughly controlling 80-85% of the global transactions and settlement processes, and even when you have US dollar to euro trade, it begs the question, which is namely, where is the light here in terms of at the end of the tunnel? Where's the tunnel? Where's the light at the end of the tunnel in terms of any mechanism to evolve as an alternate measure? People are still working on it, and they will continue to work on it. But when you have number one country around $30 trillion or 27 trillion dollars economy, then you have a $20 trillion economy. Then what are you looking at? You're looking at next three economies between them together is about $15 trillion: Japan, Germany, and India. So we need to see these numbers lift. India is going to, but will India ever trust China to be an arbitrage player in this ecosystem? I don't think so. Okay, so when you look at next 20 to 30 years, China and India are going to be very formidable in Asia. Then when you look at the ASEAN countries, which are going to be a significant trading partners either with China and with India, are they going to be reliant? They're still looking at a country where there is a legal framework around the three factors that I mentioned. So this has been my consistent view based on the data that I am looking at. Will China change, and will China dramatically change? Will China emerge as a balancing power across its three factors, which is central banks, which is political, which is systemic, and then eventually having enough kind of trading mechanism to buy and sell? So if I need renminbi, I need to be able to go and buy renminbi. If I need to sell renminbi, I need to be able to go and sell renminbi in a market. You want me to give you an example? Look at what they have done to Hong Kong. Look at what China has done to Hong Kong. Hong Kong is still pegged on US dollar. It's not pegged on renminbi. Okay, so let's see the day either when Hong Kong dollar gets completely integrated into renminbi, or Hong Kong dollar getting pegged to renminbi. That's the first sign that there is going to be any kind of movement happening just within the shores of China itself.
Thank you so much, sir. And viewers, you got your answer, I hope. And please like, share, and subscribe to our channel. Don't forget to click on the bell button for notifications. Sir, you have a great trip in the Silicon Valley. You've been very busy meeting a lot of people. You're here for a few more days. Have a safe trip back home, sir. Namaskar.
Namaskar. Thank you so much. It's always a pleasure, Sriji, to be with you and enjoying our interactions and deliberations.
Thank you so much, sir. Namaskar.
Namaskar.